All right, so everyone, welcome. This is Trader Travis. I have my Success Academy, my Success Academy co-trader Peter on the line with me here to share our weekly recap. As always, hey, everything we're sharing is for educational, informational purposes only. We go over our real trades, whether they're real money or virtual or paper trades. This is what we are doing in the market. Regular people every week showing you how you can model what we do. And using the advice of my mentor, something I haven't been doing, he said, hey, make sure when I have these videos, I tell newer people, click the link below or the link somewhere around in this video to sign up for our case study to show you it. I recorded a free video case study. It's about 3 videos. You just put in your email address. It sends you the blueprint to how we trade options like Warren Buffett. A lot of people don't know he trades options, but I discovered his secret, not so secret method, and my performance skyrocketed after that. As a matter of fact, so far for the last couple of years, I've increased my account by 60% every single year, and I'm inviting you along to watch. Now, with that being said, I'm going to give the floor to Peter first this week. He's going to cover his trades. I will lightly touch on my trades. I don't have much to report. I have a lot of personal stuff going on, so I only place a few trades, and I'll kind of talk about that. How do you weave this commitment to financial freedom, placing trades in around life stuff, kids going to hospitals, in-laws moving in with you, stuff like that. So, we can kind of talk about that. And then I'll share a lesson on insurance again, because I had someone having an issue, an objection against this concept of stock market insurance. Like, why should I pay for insurance? It's going to hurt my performance. So I'll talk about that. So with that being said, Peter, let me turn the floor over to you.
Okay, cool. Thanks, Travis. Hey, the other thing too, you guys, if you like the videos, hit the thumbs up button. Leave any comments you have below. We'll get to the positive ones. The negative ones we usually don't. At least I don't. Now, if you have something constructive, by all means, let us know, because we know we're not perfect in everything we do. And then the other thing is, if you really like it, subscribe to the YouTube page so you get notifications every time these come out. We do record them every Tuesday. Travis usually gets them edited and put out on the site within a day or two, right? 24 hours or whatever. So, yeah, go ahead.
Go finish your thought and I'll jump in.
That's it. That's all I was saying.
Okay. Well, thanks for that. On the negative note, I actually came up with a solution for me so that, my whole life, I was telling my wife, my mom actually prepared me for this. Every day as a kid, people who know my story, she would tell me she wished I was dead. She'd wish she had given me up for adoption when she had the chance, like literally abused the heck out of me, gone for weeks at a time, no heat, food in the house. So I told my wife, I was like, she actually, it was an incredibly painful childhood, but she prepared me for haters. Like the stuff they say, it doesn't bother me. I'm like, dude, bring it. My mom told me I was dead every day. Like, your little words don't hurt me. But you still have this like desire to just like say something back. So bring it. Like, that's all I say, because I found a solution that actually I'm thrilled with. I love now when people say something negative about me. Like, one guy called me a faggot the other day by email. Stop sharing your sob story. And I was like, and I got excited because now my new solution is when somebody says something negative, I'm going to do more of what caused the comment. Do you notice they're not criticizing me because I'm on my TV, on my sofa every day, fat, looking at TV, not contributing to the world? It's because you and I, Peter, we're out here trying to add value to the world, trying to help people. That's why we're being criticized. So I was like, I'm just going to do more what caused the comment. I'm going to turn around, create a piece of content, give away something for free, help somebody out, and do more of what caused it. And that's my way of payback, and to take that energy, because you want to say something and it's usually, I'm not being a good Christian when I say stuff back. It's usually blunt and snippy. But I'm like, I'm going to stop that, because it's not what my role models like Tony Robbins would do. It's like Tony Robbins is not wasting his time with some trolls on. He's out making an impact in the world, and that's what I should do. I get criticism, cool. Let me lean into impact and impact people more. No, that was a long ramble, but I just had to jump in there because I don't worry about, go ahead, bring it. I want you all to, because I really want to add value to people's lives. So the more negative comments I get, the more I get to add value to people's lives. So now let me shut up and give the floor officially to you.
No, that's fine. Okay, so I will, let's see, can you guys, you can see that screen?
Yep, yeah, I can see it, yep.
Okay, so I covered this last week. Remember we were talking about Apple. If you guys have never traded Apple before, so I have a call option with Apple. I actually have a debit spread as well. Excuse me. Um, the debit spread, the reason I have a debit spread is because I have one account where I can't afford to buy call options. A call option, the ones that I have, they cost $800 a piece. That's not cheap. A lot of times what people will do with call options, and kind of going off on I just thought of saying this, Travis, so I apologize, but what a lot of people will tend to do to buy a call option with a stock that they want to be in, like Apple, and they can't afford it, is they'll buy one that's way out of the money. And then it doesn't make any money, and it ends up just costing them money. So I spend 800 for mine. They may spend 300 for theirs, but they don't have a chance of making money because it's so far out of the money. They end up just losing money. So the alternative to that is, if you can't afford the call options, but you still want to trade Apple, buy a debit spread, because I bought a debit spread with similar strikes, actually a little bit better strikes, and it only cost me $130. So that's a huge difference between an $800 call option and a $130 debit spread. Just understand that my call option has an infinite return and your debit spread doesn't. But if you want to trade Apple, you can just do debit spreads, especially if you look at Apple. It's just been raging higher. I don't expect it's going to stop. I should reword that. I'm waiting for it to stop because Apple usually does this. You can see this is about when I got into Apple, somewhere in, I can't remember the exact time frame. I don't have my spreadsheet in front of me. No, I got into it right at the beginning, right here. And it just kind of went up from there. And then it paused right here. So I was doing well, and then it paused, pulled back, and then today, look at it's way up again. So just understand that this thing right now, it's making a lot of money, but I'm not always 100% patient, but I do know that tomorrow it may be down. It's just the way Apple goes. So, but right now, looking at that chart, I don't see any stop in Apple, so I'm still in the trade. My trade still has 57 days to it. It's really got 87, but our secret formula, we get out 30 days before. So I just gave you our secret formula. Facebook's another one I'm in. Facebook wasn't doing so well. This is a credit spread that I'm in. And right now it's out of the money for me, so I'll just ride this out. Something to keep track of, though, between Facebook and Apple, they are going to have earnings. Apple will have earnings next week. I think Facebook's around the same or sooner. So it's something to keep in mind. I didn't factor it into my trade plan. I forgot to factor it into my trade plan. So I got to kind of tweak it and see where I'm at, but I'll do it day by day. Right now, everything's working out for me, so I don't really have to do too much. Nike's dragging me down because I need it to be above 90, and you can see it's dropped to 87. So I'm using Market Club for Nike and all these trades actually right now. So if I get an exit signal, I'll exit out of Nike. I'm only at like I think a 7 or 9% loss on Nike, so not bad. All my SPYs are doing great because the market seems to be on steroids, and it keeps taking steroids, and it doesn't look like it's gonna hold true to what we think and drop. But one of the things we are cognizant of is this is getting near an all-time high, especially today. Travis, I didn't realize it was this much up now. It's almost at its high of 293 back in October. So those of you guys that follow us, or those of you guys that know about support and resistance, you know that that's usually a resistance point. So minor spreads, and they're way out of the money right now. My spreads are 288. So and they're almost at 80% return. So once they hit the 80%, I'll be out of those. And then lastly, my favorite, AT&T, just kind of trudges along right here. It looked like, it was starting to go up again, right? It got above its 200-day moving average, which is good. But I would be happy if AT&T just stayed right around the way it's at, because I trade AT&T to own it and collect on their dividends. So my covered calls that I have on it, 2 of them, I stagger my covered calls over several months for all my shares. So 2 of my covered calls are slightly in the money, but they have a lot of time, so I wouldn't expect I'd get called away. The good news is my covered calls I sold them at my price point, so I wouldn't lose any money. I would only gain money because the revenue from the covered call. However, if AT&T keeps going higher, I probably will start to reel at least one of those in, because I don't want to lose my AT&T shares. It did just pay the dividend, so the dividend's not for another few months, but I still like my cost basis that I bought it at, and my goal with AT&T is just to own the stock and collect the dividend. So, and then I rent out my shares as time goes on. Next, I'll show you what I'm looking at. So I'm looking at Exxon. These are stocks that I've always had in my portfolio on Market Club, but Exxon's all green triangles and it's starting to come up again. So I see a little bit of a resistance point here at the $81 to $82 level, and then again over here where it was at a high at 86. So I'm keeping my eye on it. If it keeps going higher and it gets above those resistance points, I'll probably start trading on it. Intel, my brother actually was trading this one, and I was like, oh yeah, I got that in my portfolio, and it's started to turn a corner again. It looks like it's starting to go up again, so I'm watching that one. Caterpillar, this is another one I used to trade all the time, and again, it's come over its long-term moving average. It's at a plus 90 today, but it's all green triangles, so I'm going to keep watching these and probably start placing some trades on them in the future. McDonald's, I don't know why I haven't been trading McDonald's, but that's another one I'm looking at. I was just looking at AT&T. We were talking about it. So Macy's, hey, Macy's. Yeah, Macy's isn't doing so great. But yesterday it was at negative 75. Today it's at a plus 55. I did buy my covered call back from Macy's so I wouldn't get assigned, which was a good option because I would have gotten assigned at the $24. And I didn't. I decided, you know what, Macy's got a green weekly last week, and maybe it's headed for coming back a little bit higher. So I'm just going to, I know I've been flip-flopping a lot on this one, but basically Travis kind of threw something out that I'm going to just do. I was going to put the loss on Macy's into my account. I'm still going to do that, but instead of taking the loss on Macy's and selling out, I'm going to just put that money in, and then I can trade on that account again as if I've closed out my Macy's trade, but I actually haven't closed it out. If Macy's triggers another red weekly, then I will most likely buy protection on my shares and then just trade covered calls on it, and see what goes on from there. Because from I did do some in the IBD. Macy's doesn't do well in their IBD formula, but it's not a company that's from the when you look at its fundamentals, it's not like completely underwater. Retail stocks are just in general taking a hit. So see what happens. I'm in Facebook. That's why it's open. I'm in Apple, and that's why it's open. That's it. That's all I got. So that went a little bit longer. Sorry, Travis, but
that's fine.
That's pretty much it.
I was excuse me. I was busy anyway, trying to get my spreadsheet ready for this short insurance lesson anyway. So it worked out, my friend. Let me take back over the screen.
I just gave it back to you.
All right. Thanks for that. I love editing software, right? I'm glad this is not live.
That's all right.
Oh, well, thanks for that, Peter. Sorry, there's a little edit there. I made a goof up, but I'm going to be quick here, or try to be quick in Trader Travis fashion. As my wife say, I talk a lot. So I have highlighted here on my spreadsheet, the only 3 trades I've opened since last time we met are Nike, Waste Management, and Disney. And I put here, I made some adjustments in my portfolio, but as far as new trades open, right, I open these 3. And I put here in my notations, made with greed, because this is a reminder to myself to recognize, because what I told members is, it was funny because a few days before that, I was like, hey, I'm on a profit high. My account is up a lot. Matter of fact, let me show you here. My account investment return is 60%. Contribution return, I'm adding money to the account, is 22%. So it shows about 83% as of now. This fluctuates. Market crashes tomorrow. This won't look like 80%. I don't know what it will look like, but it won't be 80% increase in my account. So I was like, I'm on a profit high. I don't trust the market, not even remotely. Like, I feel like it's setting us up for a lot of pain and failure. But that's what I think. We have to trade what we see. And as Peter talked about, I heard him as I was walking off, the market's at an all-time high right now. I have to get out of my head, take the money the market is giving us. So what I want you all to do is to see if you've been maximizing your potential as a human. Compare your performance to the stock market. Peter and I had this talk before we hit record. He was beating himself up, but when we actually looked at it, Peter's beating the market. If you factor in when he started this account to now, he's beating the market. If you look at it from January to now, and the market's gone up 20 something percent, almost 30, yeah, you're beating yourself up because you're like, my performance is not there. So whenever you started trading, if you were continuously trading like me, then yeah, compare your performance to the market. As option traders, we should be beating them. No. We should be matching the market's performance or beating the market. And the reason why is if you're not beating the market as an option, excuse me, if I keep saying beating, if you're not matching the market's performance as an option trader, you're wasting your time. Why? Because you could just simply buy and hold and you would have made plenty of money. But the reason we're trading options is because we didn't like buy and hold. Yeah, we were great when it worked out, but when it didn't work out, we watched 40, 50% of our money go out the window. This wasn't even part of my recap, but I'm going to keep going with this, right? So as an option trader, we're trying to get that 7 and 9% a year without that risk of losing 40 to 50%. So keep that in mind too. Just don't look at performance, look at risk. Peter risked a very laughably small amount of his account. He wasn't even in a position to lose money. It doesn't mean if the market dropped 80%, Peter would have been fine. So you have to look at both, not just your performance, but also your risk. If you've underperformed the market since January, yeah, you should be hard on yourself a tad bit, but also look at your risk. If you only had 3-5% of your account at risk, just laugh at yourself. Look at your risk-adjusted return. Then you will see you're most likely beating the market when you look at your risk-adjusted return. And what I mean by that is if you've only risked 800 of your total 10 grand account, take your profit and divide it by your 800. That's your risk-adjusted return. Your return based on the amount of money you've actually risked, not your entire account. When you look at your return for your entire account, sometimes it can depress you. And Peter, I don't know if you even did that. If you look at your profit based on only what you risk, then you get both returns, your total and your risk-adjusted return.
Yeah, okay. I did not do that.
Okay.
But I was, like I said, when we talked about it, I was still okay with it because it's like I made money when the stock market crashed.
Exactly. Yeah, you did. Yeah. Every month it was crashing, you were making money.
I was making money. I wasn't making a lot of money, but I was making money. And I guarantee there's a lot of people that were losing money.
Yeah, they would love to be in your position.
Yeah.
All right. So anyway, that's all I've done since the last time we met. I forgot greed. I finished my thought on greed. Pretty much, I said I would stop trading. I told members I would stop trading because I'm on a profit high. And here we are a few days later, I open new trades. So that meant greed won out the battle. I said greed is like a seductive, I won't say that. Kids might watch this. It's just seductive. It's whispers to you, right? It always makes you do things that you want to do. And so I put this note here to know this is not skill or anything like this. Pure greed. So if it doesn't work out, then I can look back at my notes. Okay, why did you lose money? Or why did you underperform this month? Oh, because you said you would stop trading, Travis, and you didn't follow your plan. Instead, you followed your emotions. So another way of saying it, these are 3 emotional trades. I hope they work out, but if they don't, then that's what I get. I deserve that spanking because they were made with greed and not following my risk plan of stop trading because I'm doing okay. I have too much risk out in the market, yada, yada, yada. All right. Lastly, I will leave on this topic of insurance. A lot of these trades, I was telling Peter, I have about 11 grand out.
This conference will now be recorded.
We're starting the recording again because Peter and I just rambled off into a side conversation. We were like, we didn't even end the recap. We just kept going. So this is our official ending here. We hope you all enjoyed it. We'll see you next week as usual. As we said in the beginning, make sure you click the link below, sign up for our free case study video, or if you like these videos, you're watching it on YouTube, hit the thumbs up button. Is it the thumbs up button, Peter, or the bell, something like that, or subscribe? Tells you how much I do this. Just find a way to get these videos. Oh man,
the market closed.
And I didn't even finish going through my trades. We definitely got to finish this earlier next time.
Yeah,
should be okay to. No, should be okay. But definitely let me go. I got to move my car before I get a ticket and lose money.
Okay.
All right, man.
All right, I'll talk to you later.
Okay. All right. Bye.
Bye.